Welcome back. I have been speaking with Mr. Mahesh Vyas, the Managing Director and CEO of CMIE, with the former Monetary Policy Committee member Mridul Saggar, now Professor at NCAER, and our Shankar Raman, Director and CFO at Larsen Turbo. We've been discussing whether the CAPEX cycle has well and truly started. They all agree that it appears to have started, but its continuation is what we are going to discuss now. Mahesh Vyas, on that issue, you have seen previous cycles. What is the sense you are getting? Several projects also fall off. So given your experience of previous cycles, are we at the start of the cycle? Are we well into it? Or would you still think that this could be stillborn?
We are still early into the cycle. I will not say that we haven't begun, but there are some things that have begun, which usually begin when CAPEX begins. So state governments have become very active in trying to attract investments. And that has led to a large extent an increase in the investment proposals from the private sector. So the state government's substantial activity in trying to attract investments to them is, mind you, much higher than what we have seen in the past 2 years or even 3 years. So that's a big pickup. But the completion of projects is still quite slow. So we had expected in the fiscal year 22-23 for completions to really take off, because 2 years of pandemic and all the associated uncertainties had led to these projects being withheld from completion. And so in 22-23, from an average of around 6 trillion rupees worth of completion that we have seen in the past, we had expected 10 trillion. But last month or a couple of months ago, we scaled that back to 7 trillion. And now, even that 7 trillion looks a little dicey. We may have to roll it down to 6.5 trillion, which is close to where we were before the pandemic. So no big gain after having almost lost 2 years of completions. So that's a bit of a dampener. Also, what was a little bit of a matter of concern was what we noticed in the RBI's Obicus survey, which in March 22 had said that the capacity utilization was 75%. In June, that's down to 72%. So although there are some order book positions which are increasing, there isn't enough of evidence to say that we are rolling. We are probably just beginning, and it is good to nurture this and to see that it catches momentum.
Okay. Well, actually, RBI corrected by saying that seasonally adjusted, that June number becomes a little higher at 74.3. So I don't know about that number, but I take your point. And the bigger point you're making is about this completion of projects, which certainly is a bit of a worry. Mridul Saggar, what about the other worries? Can global uncertainties, I mean, we are talking about near recessionary conditions in 3 of the largest economies, in the Euro area in particular, China as well, slowdown, not recession, and US probably impending recession. Can these take away the sparkle from our growth?
Yes, they can. I already pointed out to the Kellogg School economic policy uncertainty numbers. But I think we have to wait and watch. If global slowdown deepens, then effect will come. Nothing is certain about the war. So it will all depend on how global supply chains get affected. And that's sort of also reflected in the dichotomy, the credit growth, which we were citing as very high.
Yeah.
Part of it is inflation effects, and part of it is elongation of the working capital cycle because supply chains are affected. So not all is CAPEX. The CAPEX also is improving. You already clarified that the Obicus number is not a worry.
I take your point. Mridul, the other question, the other doubt that keeps coming to the mind is, the bottom of the pyramid. Even now, FMCG companies tell us that their volumes are growing in low single digits. They are bemoaning the lack of demand from rural India. Ultimately, if the consumer is not growing in numbers and in purchasing power, can the CAPEX cycle be stillborn?
So you are absolutely right. The accelerator theory of investment tells us that it's the lag sales or the lagged output which actually drives most of the investment. And so there is this issue. If the consumption drops, then CAPEX cycle could get terminated. But I'm not too worried about consumption dropping in India. I really don't see that happening in a big way. I'm more concerned about structural issues which still plague us, and let us not soft pedal them. This year, the NHI, for instance, the tendering has been very low compared to the target. They may have covered just some 10% of what the target is. And so far in the half, also execution has been little lagging. In terms of spending, yes, the spending on CAPEX has been good from NHI also. They seem to have almost covered what they spent last year in just one half, but it's not translating on the ground. So we need to sort of look at it deeper over what's the causal factors here. Also on the asset monetization proceeds. So asset monetization is working fine in some segments, but is not working at all in some segments. For instance, the NHAI has been able to do the asset monetization and roll the investments out. The railways haven't been able to do that. Neither is the oil and gas been able to do that. So clearly, oil and gas don't have worthwhile projects, so they have no incentive
to do that.
So whereas railways, I don't know why the plan is not really working. I think they need a more framework of concession agreements and stuff. So I think the structural issues still need to be focused on if we really want investment to pick up on a durable basis. We are at the right point now, but the government has to take further steps to ensure that this is done.
Fair point. Well, the government has its PLI scheme, hoping to tap those who are perhaps leaving China or not wanting to do incremental investment in that country. That question to you, Mr. Shankar Raman, are you seeing that PLI or China Plus One scheme working? In your October 31 presentation post results, you did point out that the Middle East demand has gone up, infrastructure, hydrocarbon-related projects. But are you seeing other regions of the world come in, especially the China Plus One?
The incremental investments have been pretty modest because in the context of PLI scheme, there are about 14 sectors which the government had highlighted for that $34-35 billion worth of allocation. But these are largely in small, medium enterprises. As Larsen and Turbo, we don't get to participate in those build-outs, which are for our context subscale. But the fact is, on the ground, a lot of investments are happening at the small and medium level enterprises. I think they are waiting for the ecosystem to also settle down, because logistics is a big issue in India. Today, the markets and the raw materials are quite divorced, and they're not serviced by efficient supply chain. The ULIP program, the United Logistics Interface program that the government is talking about, needs to come to party. I think it's very important that the steps that were to make the logistics simpler, turnaround time faster, cheaper, more consistent, reliable, all that has to come into play if manufacturing has to pick up. Insofar as Middle East is concerned, I think it is a bit of an opportunity that played out to their advantage because of the energy prices. And also the fact that a large market like Saudi Arabia is beginning to talk about not only exporting energy, sources of energy, but also using the energy to develop products and processes which they can export to the world. So I think their ambition is becoming larger, which is actually helping us as a company to participate. But at the moment, since we're talking about India, my own belief is that if India were to move to this 7.5 trillion economy, I think investment in core infrastructure, even given the fact that we are hampered by slow clearances, still issues like land approvals, utility clearances do take time. They are not as fast as it is intended to be. But even given those, I think India needs to continue and sustain its investment in core infrastructure, port, airport, roads, etc. we are now used to the fact that some agencies work at good speed at some points in time and some agencies slow down. I think Mridul was pointing out to NHI
Yes.
actually slowing down this year. They are also hampered by a very slow-paced dispute resolution.
Yes.
I think it's one thing to put out contracts. The other thing is these contracts often create disputes. And these disputes have to be very commercially and prudently resolved.
Yeah.
You cannot keep going to arbitration and go to courts and stuff like that and lose valuable time.
Okay.
One of the biggest problems for delayed execution is our ability to take commercial calls given the structure of a contract.
Fair point, sir.
Unfortunately, government isn't enabled to do this.
Yeah, well, all those points are well taken. Dispute resolution has to improve. But all three of you leave me with a very optimistic feeling that the CAPEX cycle has started. Now we have to see how long and how high it goes. Thank you very much for joining me in this edition of Indianomics.
What role does data play in enabling this new reality for, the